Hello and welcome to 15 for 15. I'm your host, Jay Masserman, one of the founding partners of RKW Residential. Today we will be interviewing Luke Wickham from IPA. Luke is a very good friend, and I'm proud and glad to have him on the program. 15 and 15 is a series where we interview 15 influential people in real estate for 15 minutes and get their perspective on what's happening in their sectors of real estate during COVID-19. A little bit about RKW. RKW is an award-winning third-party multifamily property management firm with 20,000 units under management and growing footprint regionally and ultimately nationally. RKW delivers expertise in multifamily management through its technology, marketing, and customer experience. My guest today is Luke Wickham from Institutional Property Advisors. Luke's transaction experience includes over 50,000 residential units sold with a consideration of over $10 billion in Florida. Mr. Wickham's primary focus is working with private high net worth and institutional investors seeking apartment and fractured condos in Orlando and Central Florida. Luke works with Shelton Grenade and Justin Basquill, able-bodied teammates. Mr. Wickham's team is recognized as one of the most successful multifamily teams in the country. In 2019, they closed more than $1.5 billion in Central Florida apartment sales. I also had the pleasure of working with all these gentlemen when I was with CBRE, so it's a great pleasure to have you on board. Let me open it up. The first question is basically, what are you seeing out there?
Yeah, so it's obviously a challenging and choppy environment out there. Previously, Orlando was the hottest market in the country, and Florida in general was a hotbed for investment activity. We've done over $2 billion in apartment transactions over the last 12 months prior to the virus outbreak. Since then, we've had about 40% of our deals have either paused or fell apart. Some of the deals are moving forward. We've had, last week, we had 2 deals go hard and go non-refundable and move forward. We had a deal that recently closed. It was like around a $50 million deal close. So we're having some positive news and deals are getting done, but it's definitely a challenging environment in the current state.
Agreed. So if a deal's hard, and it was pretty close, and it's Fannie and Freddie financed, pretty decent chances of that going through. I'll ask you a couple of other questions, but one specifically that is on all of our minds is, who's going to pay rent on April 1? Have you had any indications from any sources of yours as to what that may look like right now?
Yeah, so we've been talking to our clients. We've been talking to property management companies like yourself. People are putting spreadsheets together and have been putting spreadsheets together over the last week. Today is April 1st. We probably won't have a great indication until probably April 5th or April 6th on collections. Today is an important day as far as how many people are going to pay. A lot of people pay on April 1st. And I think people are looking for answers. What I think most people have said is your rent is due, and we understand there's a crisis going on, but your rent is due. If there is some real hardship, there's some government programs, and we're educating people on those links. And then we're trying to figure out how many people are not going to pay. The guesses is around 10% that people don't pay. Worst case, maybe 20% don't pay. But we won't know probably for another 3 or 4 days. This is a very important week.
Yeah, I mean, from our perspective also, RKW, we're seeing similar. We do manage on the higher end. Most of our stuff is Class A or AA, and a lot of new construction lease-ups. A lot of people are still employed on that side of their ledger as opposed to the B and C. And so they're just working from home. Everybody's getting comfortable with Zoom and conferencing like we're doing now.
Yeah.
And so it's kind of a new world order that's going to happen there a little bit. Um, what are you hearing from the equity guys out there?
Yeah, so talking to the large clients and groups that are putting a lot of equity out, obviously a lot of those guys are big buyers, sellers, and they also provide equity for existing deals, existing apartment complexes, and then new development deals. And
Yes.
a lot of those people, the deals that were in place and kind of moving forward, they're continuing to do those. Right now, they're kind of pausing as far as doing new deals with new partners. But if they were pretty far along with the deal and probably going to close in the next, 60 days, those deals will get closed and those apartment complexes will be built and constructed. Um, the deals that were probably 12 months from closing probably get paused, and it's uncertain if those deals will get built or not. But I think a lot of the equity guys are kind of on hold. As far as the sales are concerned, the people that have 1031s and 1031 pressure, those are your best performing buyers. Those people are closing and getting deals done because they have tax motivations to get deals done. If the buyers are not really that motivated, everybody is asking for more time and extensions because they don't really want to make the decision in the current environment.
Yeah. Do you think that from a sort of a timeline perspective, the fact that we've gone through this cycle 10, 12 years of uptick, um, cap rate compression, do you think this is going to be a break in the action a little bit? Do you feel like it could, hey, just give us 60, 90, 120 days and we'll just get right back to where we were, four caps on, 20-year-old product? Or do you think that the pressure is do you think this is going to change anything?
I would think that the transaction volume for this quarter is going to be down tremendously. So, but I would think that in the third and fourth quarter, there should be a lot of pin-up demand and there'll be a lot of sales transactions. As far as a cap rate, we were selling a lot of deals. The cap rates were between 4.5 on low side to as high as a 5.25 cap rate. It'll be interesting as far as the public REITs. Currently, in the current environment, the public REITs are trading at above a 6 cap. That's also, the stock market's been down over 30%. It'll be interesting. Most of the clients we've been seeing is currently, if they need to move forward today, do not want to buy under a 5 cap. But we don't know if that's a brief thing. And that will change in 30 to 60 days. But to get someone to move right now, we're not seeing a lot of deals trade at a 4.5 cap unless they were already cooked before the virus. So it'll be interesting. I'm uncertain as far as where the cap rates will move. Debt is cheaper, and the spreads have moved, and Fannie and Freddie are right now on pause unless you're a preferred borrower. And the bridge loans have locked up and the CMBS loans are dead. So the debt market is very tough.
Yes.
So it'll be interesting to see as far as where cap rates move. But the deals that will be closing over the next 3 weeks will be closing sub 5 caps. So those are 4 cap deals.
And those are financed by the agencies?
Yes. And those deals were pretty much non-refundable. Are pretty close to being non-refundable before the crisis.
Yeah, and we had heard that the agencies might add some additional interest reserves, because one of the things that nobody knows right now is what's going to happen to the tenant base and how much that weakens in terms of the rent rolls on the properties, et cetera, and whether or not expenses might go up because of the COVID-19, extra treatments. extra cleaning of amenities. You're going to have to maybe have more staffing on properties coming up these days. So, okay.
Yeah, we've been seeing that too. Fannie and Freddie are making people put about a year's worth, 12 months worth of interest and interest payments and principal payments in escrow, which is about 10% of the deal size, which is lowering leverage on essentially bringing more equity to the table than you needed to before.
Sure. Yes. What segment do you think is going to get hit the most, sort of A, B, and C? And I think we've talked about the A's and thinking maybe there's a little bit of insulation because if those folks have jobs already and they're working from home and Zooming, that, they're still going to get paid. Also, the government package, the $2 trillion stimulus package actually does have in it, people are trying to figure it out right now. Where you're incentivized to keep your people on staff, et cetera. So all that, thank goodness, is going to help. But what are your thoughts on sort of A, B, C? How do those different segments get hit?
I think that the deals that are fully stabilized and are over 90%, 95% occupied are going to be in a much better place, because right now, if you had to move, and you'd have to get a moving truck, and getting a moving company to move you, it's very tough in the current environment. So you're going to see a lot of renewals. We're also seeing other management companies signing 14 to 15-month leases versus 12-month leases, trying to lock people in to longer term. Depending on the landlord, some people are still wanting their 6 to 8% increase, because that's what was pretty normal in Orlando for the last 24 months. Other people are renewing people without an increase, just to kind of lock them in for another 12 months until we get through this. I think most people will agree that the next 60 to 90 days will be bumpy. But as you mentioned, the $2 trillion is huge. That's probably going to be here in less than 30 days. And I think that's going to really help a lot of people get through this. I mean, if you look at GDP is around 21 trillion, and the government's putting in 2 trillion, plus with the Fed, it's another 3 trillion of quantitative easing. So that'd be 5 trillion in a 21 to 22 trillion dollar GDP. So, I mean, the government's really stepped up big. So that's going to help a lot of folks.
Yeah, agreed. So I want to do a little bit of a lightning round. We have a couple of minutes left here. Let's have a little fun in this environment of high stress and uncertainties and everything else. So let's do a little over and under here. 180 days, things are back to normal in regards to transactions. Thoughts?
Yes. I think definitely there'll be a lot of transactions, and there's a lot of people. Florida, we're very bullish.
Yep. 10-year under 1% for the rest of 2020.
I'm going to say it's going to get a little bit above 1%, like maybe 1.10.
Okay. Under the over and under in the next 90 days that you'll be on an airplane.
I'm going to go over. I'm going to be on an airplane in the next 90 days.
Okay. Over and under the next 90 days that you would attend a networking event.
Over. I'm going. I'm definitely.
Over and under next 90 days, you have lunches and dinners with clients again.
Yes, I'm definitely. I'd say next 45 days I'll have dinner with a client.
All right, and as you know, we never get political on these things, so I have to ask you, do you think the election will get suspended?
No, I believe that they will have an election in November.
Okay, and totally, completely non-political, do you think Trump will win or lose?
I believe Trump will win.
Over and under, the stock market closes at 20,000 for 2020.
That's a tough one. The market's been hit pretty hard over the last 30 days. A lot of rough tape. I think we're going to get through this virus. And as Warren Buffett always says, I wouldn't bet against America. So I believe that we'll be over 20.
Yeah, agreed. Well, look, we really want to thank you for joining us on our episode of 15 for 15. We hope that you stay safe and your family safe. Practice social distancing. Wash your hands 100 times a day. We thank you. We please remember us, your teammates, our dear friends, and to those out there watching this. If you have any questions or you'd like to follow our RKW 1515 series, please log on to www.rkwresidential.com. We thank you very much, and we wish you a great day.
Thanks so much. Thanks for having me, Jay.